The June 2025 Purdue University CME Group Ag Economy Barometer fell 12 points to a reading of 146. Despite this month's decline, however, that still leaves the barometer 41 points higher than it was at this time last year. The current condition index fell 2 points to 144, which leaves that index 54 points higher than it was a year earlier, while the future expectation index fell 18 points to 146. That still leaves that index 34 points above the June 2024 reading. And of course, the decline in the future expectation index is what really drove the decline in the Ag Economy Barometer. Farm Financial Performance Index fell 5 points to a reading of 104. That left that index 19 points higher than it was this time last year. Somewhat surprisingly, the investment index rose 5 points to 60, nearly matching April's reading of 61. And the percentage of respondents saying it's a good time to invest actually rose to 24%, up from 19% back in May. However, despite the improvement in the capital investment index, it does not look like producers plan to follow through and invest in farm machinery, at least here in the short run. 54% of the respondents in this month's survey said they plan to reduce their investment in farm machinery this year compared to last year. That's up from 48% who felt that way a month earlier. The short-term farmland value expectation index at 120 was 4 points lower than a month earlier, but that still leaves that index 5 points higher than it was in June of 2024. Producers' expectations for ag exports remain quite volatile. Going back to 2019, we've been asking producers what they think over the next 5 years will happen to ag exports. Are they likely to increase, decrease, or remain about the same? 41% of producers said they expect ag exports to increase in the month of June. That's down from 52% who felt that way in May. The percentage of respondents who expect exports to decline actually rose to 16% this month. That compares to 12% a month earlier. Back in March, 30% of respondents said they expected to see exports decline over the next 5 years. Going back to March, we've been asking producers what impact they expect to see on their farm's income as a result of the U.S. government's imposition of tariffs. 46% of respondents in June said they expect to see a negative or very negative impact from tariffs on their farm income, up from 43% who felt that way in May. Overall, there was less concern about a negative impact on income from tariffs in the May and June surveys than there was back in the March and April surveys. Finally, on a question that we've been asking for the last 3 months is, do you expect the increased use of tariffs by the U.S. to strengthen or weaken the U.S. ag economy in the long run? And a majority of U.S. producers continue to say that they think the use of tariffs by the U.S. will strengthen the U.S. economy in the long run, although the percentage who felt this way in June did decline modestly to 63% compared to 70% who felt that way in April and May. You can get more details in the full report on the Purdue CME Group Ag Economy Barometer website, which is purdue.edu/agbarometer. And on behalf of the Center for Commercial Agriculture, I'm James Mintert, Professor Emeritus in the Department of Agricultural Economics at Purdue University. Thanks for joining us.